Welcome to today's topic, FRRB Financial Statement Review Regulator with the disciplinary proceeding. We heartily welcome our today's speaker, CAV Ravindran sir, to occupy dais. I request all to please rise for our CA motto song.
सुप्तेषु जाग्रति येष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमानः तदेव शुक्रं तद्ब्रह्मा तदेवामृतमुच्यते अस्मिन् लोकः शतः सर्वे तदूनात्यर्य कश्चन एतद्वैता
Please be seated. Woofer video will be played.
Arthashastram, Dharmashastram cha mean economic principles Arth and ethical considerations Dharma, which are central to the work of accountants. The entire world is deliberating about impact of climate change coupled with disruptions of artificial intelligence. India has given philosophy of Vasudhaiva Kutumbakam to the world and successfully hosted G20 summit on this theme and also launched Global Biofuels Alliance. The accounting profession also has an enormous responsibility to guide the work, where accountability meets innovation so that vision can be converted into solution. The Institute of Chartered Accountants of India, being the world's largest accounting body after the successful hosting of WCOA 2022 and GLOPAC, proudly presents before the World Forum of Accountants 2025. Where accountability meets innovation for a sustainable planet. The world's brightest minds will exchange insights, explore emerging trends, and unlock the possibilities for the profession, where foundation will be laid to shape the vision for the future of accounting profession. Hosted at Yashobhoomi, the largest convention and exhibition center in the heart of India's capital, New Delhi, inaugurated by the Honorable Prime Minister Shri Narendra Modi, is all set to host the congregation of accountants from around the world. And while you're here, experience the vibrant culture and heritage of New Delhi, a city where history meets modernity, offering unforgettable memories.
World Forum of Accountants, an experience of 3 days, insightful discussion, groundbreaking innovations, and unparalleled networking opportunities.
With immense pride, we invite you to WOFA 2025, taking place, happening from January 31st to February 2nd, 2025 at the magnificent Yashobhoomi, New Delhi. Experience 3 days of insightful discussions, groundbreaking innovations, and unparalleled networking opportunities. World Forum of Accountants 2025 is where you need to be, where accountability meets innovation, AI for a sustainable planet. Join us at WOFA 2025 from January 31st to February 2nd, 2025 at Yashobhoomi, New Delhi. For visit wofa.icai.org.
It's my pleasure to introduce CA Ravindran sir, the qualified chartered accountant and practiced since January 1987. He did a DISA and he is a qualified insolvency professional, registered valuer, independent director, social audit examination. He is in the panel of 29 back before merger. He was a chairperson of Salem branch in the year 2017. Was the co-opted member of Banking and Insurance Committee of SIRC of ICI in 2019 and a member of Branch Coordination Committee of SRC in ICI in 2020-21. He was carried out various kind of bank audits such as statutory branch audit, concurrent audit, revenue audit, stock audit. He been a faculty person at ICI on concurrent audit of bank, digital audit and assurance board, on ethical standard board, on valuation, on insolvency professional. At present, organizing bank audit and service tax series for chartered accountant, which is an all India program through webinar where more than 4,000 chartered accountants are benefited. The main topic covered are all topic on bank audit, Foreign Exchange Management Act, pre-review and other tax related. He individually conducted education loan awareness seminar for students of Salem and Erode, wherein more than 7,500 people were participated. He conducted investor awareness program for public. He interviewed many VFPs for his Sri P. Chidambaram, the then Finance Minister of India. He has written a bank loan article to various diaries. Thank you, sir, for your presence to our topic. Thank you, sir. I request CA Sudarshan sir to present shawl number to our speaker. And over to our speaker.
Vanakkam. I think you know Tamil pretty well. Anybody who knows Tamil? Tamil தெரியாதவங்க யாராச்சும் இருக்காங்களா? Okay. தெரியாதா? So she knows Tamil. So you can ask her. Okay. Just for fun. Okay. Before going to the presentation, there is FRRB. And I am going to start with disciplinary proceedings because it's a very, very interesting board, very important board which is going to play a very vital role in all our life. And before going to that, I want to start with one Tirukural. I think anybody who has attended my class previously for some other subject? No. Okay, I want to start with one Tirukural which you have to interpret. Karka, Kasadara, Karpavai, Katrapin, Nirka, அதற்கு தக இந்த குறளை எப்படி படிக்கலாம்? Anybody can try? கற்க கசடர கற்பவை கற்றபின் நிற்க அதற்கு தக. எப்படி படிக்கலாம்? This is audit. This is statement. This is your life and everything. Okay, I'll start with the answer. கற்க கசடர கசடர கற்க கற்க கற்றவை கற்றவை கற்க கற்க கற்றபின் கற்றபின் கற்க கற்க நிற்க நிற்க கற்க கற்க அதற்கு தக கற்க. ஸோ இந்த ஒரு குறளை மட்டும்தான் 1330 குறளில் வந்து யூ கேன் இன்டர்பிரட் இன் எனி ஃபார்ம். கற்க கசடர கற்றவை கசடர கற்றவை கற்றவை கசடர. ஸோ எனிதிங் யூ டூ த உல்டா. ஸோ த லாஜிக் பிஹைண்ட் இஸ் திஸ் இஸ் தட் யூ ஹாவ் டு இன்டர்பிரட் பிட்வீன் த லைன்ஸ். Don't take everything on the face of it. This is a concept. That is why I started with that Tirukural. So, and the entire 1330 குறள்லையும் இந்த மாதிரி ஒரு interchangeability எதுலையுமே இல்லை. ஒரே ஒரு குறளில் மட்டும்தான் இருக்கு. So, my attention which I want to invite you, you have to interpret between the lines. Don't take everything lightly straight away. Otherwise, you will be in trouble. So I want to start with some disciplinary proceedings. I am going to touch the full portion of FRRB, but the end of FRRB, you may face disciplinary proceedings or you may not face disciplinary proceedings. But since I want to start with disciplinary proceedings because there's already case is going on and some decided cases out there, I am going to start with two cases. And before going to the case, I want to start where our reporting starts. You have to get the appointment first for the audit. And my sincere request, please maintain the working papers properly, because that will help you in every proceedings, not only for the reporting, but for all the disciplinary proceedings, for any question raised by the regulators, any question raised by the police, any question raised by the CBI, your working paper saves you. So please maintain the working paper. That is a basic for all the disciplinary proceedings. So here, one of my friends from Europe, I don't want to mention the bank name, I don't want to mention the member name. He has been appointed as the concurrent auditor. He has reported his report in a proper manner as per the bank's rules and regulations, because it is everything depends on the reporting. He has given the reporting correctly, and we have to certify that all our reports show true and fair view. So true and fair view, where it starts from the audit. If you did the audit perfectly, then your true view is correct. Otherwise, you are wrong. He has reported correctly, but in one of the months, in the month of January 2019, he found there was a heavy transaction in the suspense account or sundry deposits account. When we analyzed, he came to my office, when we analyzed, he found that the bank has accommodated some fraud through that account. The bank as a whole, because the bank staff, they already committed a fraud of 37 crores and all the staff have been suspended or dismissed. Most of the staff have been suspended and most of the staff have been dismissed. Here, he has reported the fraud. He has reported the fraud to RBI. But as per those persons who are going for concurrent audit, please go through the appointment letter very carefully. If the fraud exceeds 1 crore, you have to report to RBI directly. It's a part of your role. You can report to the head office, but you have to simultaneously report to the RBI. He has reported. Then the problem starts. Then the bank's head office team asked him, who asked you to send the report to RBI? Because he has done the report very perfectly, and they have raised disciplinary proceedings against this member, saying that because of the auditor's negligence, the bank has lost 37 crores. This is a very, very dangerous allegation. And in support of this, I want to say one of the guidelines given by the regulator, that is RBI, if any fraud is undetected during the course of audit, whether it's a bank or NBFC, if any fraud is undetected during the course of audit, then the auditor is held personally responsible for the loss to the bank, apart from losing your certificate, facing issued action, etc., etc., etc. So you are responsible for the loss to the bank. Because if you fail to identify the fraud, they made a complaint that this auditor has failed to identify 37 crores. He has reported perfectly, because I have gone through the report and I am very much satisfied with the report. Everything is as per the bank norms. Then because they referred the matter to the disciplinary board, and disciplinary board, they have sent a letter to them asking for the explanation. He has given all the explanations. Then saying that, sir, the fraud has not taken place during my audit period, it has taken place prior to my audit period. Then only they realize that the mistake is not for this auditor, because they want to make the auditor as a scapegoat. They want to pinpoint the mistake on this auditor. So I made him, because I said I have helped him, I made him to escape from the case. So it is there from where the disciplinary proceeding starts, because bankers, they already made a complaint because of your reporting not only to the head office, reporting to the RBI. Then next point, after some time, after a month, they sent another letter to the disciplinary committee saying that, sir, because of this auditor's negligence, we have lost 13,000 rupees, not the 37 crores. From 37 crores, they come to 13,000 rupees because he has not seen the vouchers. But in his working paper, he said, sir, there are no vouchers for this transaction. He has made the point in his report. So he has reported properly. So he has escaped from the disciplinary proceedings of the insured. So my sincere request to the fellow members, please be sincere. You have to maintain the working papers. Don't take the audit very lightly because the reporting starts from the audit. So the board says it is Financial Reporting Review Board. So it's a reporting review. So where the report starts, it starts from the audit. So the audit, from where you will get the audit, I have got a very big list. I will give the list because that will also help you in professional, because I have seen a lot of youngsters are here. I will also tell the professional opportunities available through this board also. So this is the first case. And another very peculiar case I have got from one of the rural area. One chartered accountant has called me and said, sir, I have received this letter from the insured. The client made a complaint that, sir, I have filed the returns with the auditor since, yes, that assessee is a salary employee. She has raised a complaint against the CA stating that, sir, he has not filed my income tax return for the assessment year 23-24. See what has happened when the 24-25 return filed, there was an arrears in the year 2021, 2019, 2010 there was an arrear, 2024 that arrear was adjusted against the refund. He said, sir, my auditor has entered his name in the profile. In all the mail, it has to be received only by the auditor. All the telephone contacts he has to receive, and he has not entered my number. This is one of the complaints. So this is also another caution I want to give to you. Don't enter your contact number, your mail ID in the client's profile. There the problem starts. I'd say at the year 2010-11, it was only manual filing. It is not online filing. So we escaped. So he has given a report saying that the normally salary employees, they used to come to your office and say that, sir, whether my salary working is correct. Normally what you certify, working is correct. You just put your signature. You are not reported to anyone. But they made a complaint saying that the working certificate given by the chartered accountant is also wrong. So indirectly he is reporting to the client saying that the working is correct. So there also disciplinary proceedings started. So disciplinary proceedings you can find anywhere. Any type of disciplinary proceedings you can face, but my sincere request, please maintain the working papers correctly. Since he has maintained the working papers from the year 2011, 10-11, he has escaped. And another, because before going to the session, I want to share some of the cases so that this subject will be very interesting. So here, I already said the report starts from the audit. So you are going for various types of audit. You are going for internal audit, you are going for internal audit for companies, internal audit for banks as the form of concurrent audit, revenue audit, stock audit, etc., etc. So here it has happened in one of the, again I am touching the bank because that is also part of the reporting. In stock audit, you have to report everything as per the bank's norms. They have given a prescribed format, they have given the rules. Based on the rules, you have to conduct the audit and everything. So when I went for the audit, I found that one account has become NPA, and when I scrutinized the document, I found that the previous auditor who has done the stock audit, he has not verified the records correctly. He has not gone to the unit at all. He has not seen anything, but he has reported that the stock figures, financial statements produced by the party and everything is true and correct. He has given a true and fair view. Then when I found, because next audit I am going, there I found that that account has become NPA within a period of 18 months. Within a period of 18 months, if any account has become NPA within a period of 18 months, you have to be very, very careful. And then I looked that account from the fraudulent account, then I noticed that the funds have been squared by the party. I'll tell the modus operandi because that is also required for the reporting format. So there is one scheme in all nationalized banks. If you want to help your clients, you can use this scheme for your client also. If you give 50% collateral security, you can get 100% loan from the banks. It's a MSME scheme up to 5 crores. Only 50% collateral is required. You can get 100% loan from the nationalized banks. So this guy, how they utilized, they have deposited 9 crores as a liquid cash. They have deposited 9 crores and they have got 18 crores. There is also another scheme in MSME. You can, without mentioning any ceiling, you can, if you give 100%, 50% collateral, you can get 100% loan. So this guy has made a deposit of 9 crores, he has got 18 crores. This auditor said everything is correct. The fund, they have reported that funds have been utilized properly. All certificates which the bank asked, he has given. This guy, what he did is a working capital loan. So working capital loan has to be utilized only for the purpose of buying raw material, making the production and use it for the stock, finished stock and for the data. What this guy they did, he has transferred, he has got 18 crores loan from a bank. This 18 crores he has transferred to B bank. There he has got 36 crores. Because the rule is 50% you deposit, you will get 100%. So here he has deposited 9 crores, he has got 18 crores. This 18 crores he has deposited to another bank, there he has got 36. He has transferred to this 36 to another bank, he has got 72. From there 144 and lastly it goes to, I don't want to mention the name, some E bank, there is a leader of the bank in entire India. There they refused to give the loan. One fine morning, without any hesitation, he closed the unit he ran. So the auditor, the previous auditor, if he has reported correctly, this fraud would have been escaped. Now the matter has been taken to CBI now, and that headache is, I have become the auditor for the next period. I have become the stock auditor. I have given the report, and in RBI there is because RBI that point also coming in FRRB because they can also make a point in regulator. Is they are one of the regulators. They can give the complaint to FRRB for the inquiry, and for RBI to fix the fraud, there are 3 stages. Just this is for your professional help. There are 3 circulars available. First thing is, if there is any fund diversion, that is the loan, the funds have been transferred against the purpose. So if you prove it, it is a fund diversion. Fund diversion, next stage is you can have willful default. Second circular is willful default because he has not refunded the amount, he has not returned the amount. So I proved that it's a willful default. And third one is siphoning of the funds. If these 3 stages have been proved, you can call that account as a fraud. Now the bankers, they made a complaint to the disciplinary proceedings saying that, sir, this stock auditor has not reported properly, otherwise we would have saved the funds. Okay, this is auditor's problem. But where the problem starts, when the person who scrutinizes a document, he never cares about the background of the party. They just simply receive 9 crores. So for CASA, there is for deposit purpose they received, they have sanctioned the loan. And the person who has sanctioned the loan, he has resigned from the bank. And the person who processed the loan, he has also resigned from the bank. And the person who has renewed the loan, he has also resigned from the bank. All these factors are known to the chartered accountant. He never cared to see these points. Why this manager has resigned? Why this process officer has resigned? Why the renewal person also, the person who has renewed the loan, he has resigned. They never cared to see this.
Now he is facing the disciplinary proceedings because of his wrong reporting. So reporting starts from the audit. So if you did the audit very perfectly, very correctly, then you are safe. So this is a thing I want to say with the opening remarks, and during my presentation I will cover few of the cases. So this FRRB has been started in the year 2002. It's only introduction just I'm giving because I want to just start with the introduction. And who is the other body which controls our profession? NEFRA. It has started in the year 2018, but this comes in the year 2002. But a lot of in slowness in taking the decision that motivated the company of Ministry of Corporate Affairs to form the NEFRA in the year 2018. That is on 1st October 2018, and it's being created by ICA to enhance the financial reporting practices. So financial reporting practices, all this FRRB is with the NAS. What is the expansion of NAS? Is this International Accounting Standard or Indian Accounting Standard? Is it International Accounting Standard or Indian Accounting Standard? It is Indian Accounting Standard, NAS. It is not International Accounting Standard, it is NAS. So it has been created by our ICA to enhance the financial reporting practices in India. Now, I want to say one thing. Normally what we do means it is inclusive of me. I certify the statement based on the records produced, whether the statement is correct. I certify the statement saying that the statement is correct. With the available records, I certify. So financial requirement requires a step ahead. So if everything is available, there is no need for you to certify. Just because the certificate is required from a chartered accountant, you are just signing it, but you have to go ahead with the financial requirements. And it functions as a non-standing committee of ICA and elevate the quality of financial reporting and audit process by the chartered accountants. Because you just go to the website of FRRB, you will get a very big, very big introduction, but everything depends on the NAS. The entire FRRB proceedings have been governed by the NAS. They have released so far 2 volumes regarding FRRB. In support of that functioning, they have released 2 volumes. You please go through it. And apart from that, there is another volume available, commonly found errors in reporting practices. That is also issued by ICA, and it's being issued by the research committee. You just go through it. You will get all the information about the mistakes where we are committing the mistake. Also object, just is all theoretical. Responsible to review the general purpose of financial statement of diverse enterprise. It assesses the extent of compliance of generally accepted accounting principles. Gap towards preparation and presentation of financial statements. It evaluates adherence to disclosure requirements stipulated by regulated bodies and is applicable for all the enterprises. What's all the enterprises? What's the definition of enterprise? All the enterprise, is it a company? Here they use the word only enterprise. Nowhere they say that it's a company. Enterprise means all the individual firm, company, everything is included. But this FRRB said it's an enterprise. Nowhere it is defined that enterprise is only limited to company. And to share the financial reporting in India by the CS. It's a motive, it's an object they created in the year 2002. What's the composition of FRRB? Members of the Central Council members are the members of this FRRB, and nominee from the government is also there, and representative from various regulators. Here the main role comes. The representatives from the various regulators, that is including SEBI, C&AG, Central Board of Indirect Taxes and Customs, IRDA, Election Commission of India, and other regulatory bodies. All are the members of the FRRB. Who are the regulatory authorities in India? Can you guess? One is RBI. Who are the other regulatory authorities? According to me, there are 36 regulatory authorities in India. All the 36 regulatory authorities, they can make a disciplinary complaint against you because you are certifying everything. If you are going to a cooperative society, you are certifying ATP certificates saying that this society is not eligible for the income tax, they have got the income tax exemptions. So they can make a complaint. So here you have to visualize the reporting in two formats. The banks are there, branches are here. So you are going as a branch auditor, you are reporting as per the bank's circular, norms, forms and everything. So you are reporting to the head office. The bank in turn, they are consolidating everything, they are reporting to the RBI. If there is any mistake done by the bank's head office, the bank itself, they point out on the chartered account. So it's a chain. So the complaint, it comes not only from the head office, even from the other regulators also, they can make a complaint. We'll see the regulators list. RBI, SEBI, IRDA, Insurance Regulatory Development Authority of India, then Pension Fund Regulatory Development Authority. See, one thing I am giving here, for youngsters, please note that you have got lot of professional opportunities in this 36 area. For Reserve Bank you will not get, but Reserve Bank if you want you can go and get from bank, as a bank auditor you can get lot of opportunities, but SEBI also you can do the practice, IRDA you can do the practice, Pension for Fund Regulatory Authority, then NABARD. Who are practicing in NABARD? Please touch that area. It's a very big area wherein you can do the practice, but this Agricultural Development Bank, they are financing the all the agriculturists, and they are helping you. For them, you have to give a lot of certification, and if you give a wrong certification, then NABARD can make a complaint to the FRRB saying that whether the report given by the auditor is in proper order or not. In that manner, they can make the complaint. So this is also another very big area where you can do the practice. And SIDB, NHB, how you can do the practice? National Housing Bank. Even you can take the franchise from the. You can create a housing company. Thereby you will get a lot of funds from the NHB. So you can do the business also, but don't do the business in your name. But you have to do the business in your relative's name. Otherwise, it amounts to professional ethics. So NHB also one of the regulators. Then Central Board of Film Certification. If you concentrate on this, you will get lot of audits from the actors and actresses. So this is also another area, but you have to give a proper certificate. So this is also another area. Then Financial Stability and Development Council, Food Safety and Standards Authority of India, Bureau of Indian Standards, Advertising Standards Council of India, BCCI, that is Board of Cricket Control of India, then Mutual Funds, Engineering Export Promotion Council of India. Actually, Export Promotional Council, that is normally you can have that ECGC client, you can help them. You can find the export buyer. That's a very big area wherein you can concentrate to do the practice. You can buy the export buyers. You'll be getting very good client, very good income. Also, you can help the client to find the machinery how to import the machinery, what are the machineries available. So all these areas, in my experience, I will tell a lot of chartered accountants throughout India, they are doing the practice. But this council can also make a complaint to the FRRB saying that yes, your chartered accountant has given a false report. So please be careful. This is also another regulator. Then Express Industry Council of India, then Federation of Indian Export Organization, Indian National Ship Owners Association, Indian Chemical Council, Indian Stainless Steel Development Association, Manufacturers Association of Information Technology, National Association of Software and Service Companies, Organization of Plastic Processes, Projects Exports Promotion Council of India, Central Drugs Standard Control Organizations, IBBA was the latest thing, Insolvency and Bankruptcy Board of India. I think how many of our friends have cleared that 2 examinations, one is IP and second one is Registry Valuer. Anyone who has cleared IP? Yes sir, you are my partner because I also cleared IP. Any Registry Valuer? Those persons who are cleared. I mean, I've got 3 years of experience, please do it. You can mint money like anything. But give the certificate in a proper form. Proper form you have to report. You can mint your money, minimum certification, you can get minimum of 50,000 rupees per certificate. And you can do the practice in that area. So IBBA also gives a very good professional opportunity to the chartered accountants, and also lot of complaints have been made against the insolvency professional because of their few IP they did some malpractice. They adjusted with the clients and everything. All types of disciplinary proceedings they have initiated. So IBBA is a very strong body now. So if you are qualified as IP, if you are qualified as RV, you have to be very, very careful before you give the report to the. And the National Green Tribunal, Atomic Energy Regulatory Board, and Employee Provident Fund Organization. How many of you are practicing in Provident Fund? It's a very big area where you can practice. Per day, your income will be minimum 10,000 rupees if you concentrate on this. Please, youngsters, please concentrate. We have read the Provident Fund, we have read the Factories Act, we have read the all the gratuities, every rules we have read for the examination, but please do the practice. But here, this Employees Provident Fund Organization also make a complaint saying that the chartered accountant has, the report given by the chartered accountant is not in order, is not as per the PF Act. And another regulatory authority, our institute, they can also make a complaint. So, Inland Waterways Authority of India, National Highways Authority of India, Airports Economic Regulatory Authority, Competition Commission of India, Warehousing Development Regulatory Authority, Central Electricity Regulatory Commission, and Register of Cooperative Societies. So, I have identified only this, but it is ocean. There are so many regulators in India. So, all the regulators, they want the report as per their act, as per their guidelines. So, when we are going with these regulatory bodies, so we have to report properly. If you are not reporting properly, then our name, our report will be referred to FRRB. Whether the reporting is correct or not, that they will scrutinize. And entities regulated by regulators, all the entities approved by the regulators to comply their provision. Here comes the main thing. All the entities. For IBBA, you can do the individual is also an entity, and another entity, insolvency entity is also there. So that is the entity available. For the banks, individual firms, they can also do, they will also be recognized as entities. So for each and every regulator, they are regulating they are naming the person as an entity, and all the entities are regulated by the regulators according to their provisions. All the CAs help the regulators to comply with their provision by way of preparing and certifying the financial statement. So here we are certifying true and fair. So again I am touching the bank, because bank also we have to give the proper way, we have to give that it's a true and fair view. See, in one of the statutory audit I went for, where I went, normally all banks they give the interest accrual, because deposit they are making the interest provision. See, in one of the banks where I have gone for the statutory audit, in statutory audit we have to report that the financial statement of the bank contains, it's a true and fair view we have to certify. So the system, when I verify the interest provisions, it is applicable not only for banks, it is also applicable for all the companies those companies which receive the deposits. In this case, the bank software at the time of calculating the interest provision, it rounds interest rate instead of interest amount. It rounds interest rate. The software is a software mistake. Bank as a whole, it has taken place. I have reported, I observed, sir, I am not going to give you a true and fair view for this balance sheet because the provision given by the software of the bank is totally wrong, because the bank rounds the interest rate. If it is 12.25, it gives provision for 12%. If it is 12.75, it gives provision for 13%. Whether the profit is correct or not, because we have to certify that the profit is true and correct. True and fair view we have to express with reference to the bank balance sheet. I said no, it is wrong. So we have to give you a true and fair view. So we have to certify everything. So whenever and wherever we are reporting the financial statement, we have to see that everything is according to the law, and we have to do the audit first properly, then only we can complete our reporting in a good manner. So this is the entities regulated by the regulators. How they select the entities? Suo selection of the companies on the basis of total, turnover and net worth, and companies for which accounting irregularities highlighted in the media reports. So another thing, if it is highlighted in the media that this party has committed that mistake, this mistake, then the FRRB role comes into the picture, because they have to do the regulation. Because if you certify, then you are caught. If the fraud or if any irregularities have been noticed by the media, so it is not the suo selection. Even the media also plays a very vital role. And Nifty 100 and Nifty 500 companies and entities in respect of which letter of advisory has been sent by FRRB to auditors previously. If FRRB also, if they send the letter previously, then they are also be treated as entities responsible for the FRRB based on the list of companies under the liquidation received from the IBA. So this is the latest thing. If any company has went for the liquidation, then they are also be regulated by FRRB. For this, I want to tell a very good case wherein some 72 insolvency professionals registration certificate has been cancelled by the court, saying that you have done lot of irregularities in the liquidation proceedings. Now the case is pending with the Supreme Court. The case has to come. So they have taken the liquidation very lightly. Okay, you want how much money you want to pay? You want to pay some 200 crores. Okay, you pay. But without obtaining the comparative quotation, without calling for the public quotation, then they have sold the property. And if you become a IP, then you will get lot of hit from various directions. So here, because of these provisions, almost 72 guys, 72 IPs certificates are in danger. And suppose if those IPs have been registered with ICA, it's a disciplinary proceedings. If they have taken under one act, then that also applies to your profession also. So please be ensured that you are reporting in a correct manner, and all the steps that you have to take must be very correct manner. You have to take the steps. And it's a whistleblower complaints received by FRRB, which are within its terms of reference applicable to all enterprise. So whistleblower, I think you know it. So anybody can whistle the issue. So based on that, FRRB can take its own decisions. So these are the reasons based on which the action can be taken by the FRRB. And there are 3 tiers of review. You are see, it's a financial reporting review board. So there are 3 types based on which the review is being taken place. The review is done by the technical reviewer. It's a very big professional opportunity available to the chartered accountants who have got 10 years of practice. Per certificate you will be paid 10,000 rupees. And the FRRB board by panel, they can allot the work to you. So you can spend some 2 to 3 days, provided you should be a master in NEAS. So if you want to be a master in NEAS, you have to clear the certification course conducted by our ICA, NEAS examination, please go through. So per month minimum you will get some 5 to 6 works. So you have to please try to complete the NEAS course organized by our institute. That is those charterers who have got more than 10 years of experience, they can do it. Okay, so there are 3 tier review. Technical reviewer will be there, and there's a group also. They can also do the review, because for big companies 1 person cannot do the review, so they can form a group. Even if it is not possible by the group, then the board itself can do the review. So there are 3 types of review for this FRRB. Technical reviewer, by the group, by the board. They can do the review. Now, how many of you want to become a technical reviewer? That's the conditions. A member needs to satisfy the following conditions. Possessing 5 years of experience. It is not 10 years. It is 5 years of experience of audit, who are either currently active in the practice of accounting and auditing, or in the industry having comparable experience in the fields of accounting and auditing, and qualified the certification course of NEAS. They use the word and. It is not one thing, it is not or, it is and. So first you should have minimum 5 years of experience, and you have to clear the NEAS examination, and having exposure in preparation and finalization of audit or audit of NEAS based on the financial. Suppose if you are already certified any audits, so all these things if you are having, then you can become a technical reviewer of FRRB. So FRRB say that 10,000 rupees per yes? So 20,000. Maybe. Okay, thanks for the updation, because when I read the article it's 10. It is 20,000. Okay, 20,000 plus out of pocket expenses. Is that? All inclusive. Okay, thanks for the updation, but our friend said it is 20,000 all inclusive. Suppose if you are in say Chennai, if you are go to Hyderabad,
You don't go like
online everything.
everything is on.
Sir?
Everything is online.
Everything is online. Okay.
Already an automatic tool is
You have done FRRB
last 17 years.
last 17 years. So here is our senior. I think you can come to my rescue if anything goes wrong with me. Thanks for the thing, and the updation is 20,000 rupees all inclusive. So online verification you can do it, but it's a very good area. You can review it.
All resources are available in the site itself.
Now, coming for the common mistakes. So the topic which they have given to me is the common mistakes which normally people they are doing. If you have done a common mistake, it leads to a professional misconduct. So you can face the disciplinary proceedings, and there is no need to face the disciplinary proceedings. This is what the FRRB circular says, which is material leads to disciplinary proceedings. Which are not material, there is no need to go for the disciplinary proceeding, but this materiality has to be decided by the FRRB. Action taken after reviews, material non-compliance affecting true and fair view of the financial statements, and the consequences, action against the auditor, and if it is there, then they can refer the matter to the disciplinary committee, and if the action against the enterprise, if they did the any mistake, then they can inform this irregularities to the regulatory body. And action taken after reviews, non-compliance which are not material and does not affect the true and fair view of the financial statements, it has to be decided by the FRRB whether the report is material or not. It has to be decided by the FRRB. Consequences, bringing non-compliance to the attention of the auditor by way of advisory. So they can advise that, so please concentrate on this, otherwise it may lead to disciplinary. I think they will issue the notice or they can issue the advice. And to make the regulatory mechanism of the insured more effective, share relevant details with PRB so that the peer review board, so that it may accordingly be considered during the peer review. So automatically peer review also comes into the picture. So you can also try to pass the examination of peer review course conducted by our ACI, because after 1/4/2025 you will get lot of peer review opportunities. Yeah, your firm is also subject to peer review. You can also do the peer review of other firms. So please try to complete that course, peer review. Auditing and reporting, what's the difference? Auditing is the process of examining an organization financial records and statements. Reporting is the process of collecting and processing and presenting the information. So here, auditing is part of the reporting. The auditing is the total process of examining the entire records, but reporting is the process of collecting and processing. So it is auditing is also a part of the reporting. And list of professional opportunities available in our UDIN site. How many of you have gone through the certificates required under the UDIN? There is a UDIN site. You go and type the UDIN. What are the activities wherein your certificate is required? There are some more than 70 certifications are required. All these certificates require it has got the professional opportunity. So our insured has given a very big opportunity. You can go to the UDIN, you will get a list of the certificate, you can go background of that certificate, and whether that suits your practice or not, from there you can also do the practice. These are the common mistake in the financial reporting by CS may lead to disciplinary proceedings. I think you remember this. So this slide, left side is left side is Warner and right side is Smith. Based on the cricket ball tampering case, they have been debarred for 1 year. So disciplinary proceedings they have taken. The cricket board they have taken against them. So here, investment in property. It is related to INAS 40 and para 75. So disclose accounting policy towards measurement of investments. So hereafter the FRRB main role is you have to be a master in INAS. Otherwise, if you are giving any financial statement without referring the INAS, you are in trouble. So here, the disclose the accounting policy towards measurement of investments. That is, it is applicable for the movable property as well as to the immovable property. Here I want to start with the case study. It's a case study. Normally, whenever we are going for any type of audit, whether it's a bank audit or your client audit, You should also be a master in law. You can also draft your own legal opinion. Any immovable property, if they want to buy, they will definitely come and ask you, sir, I want to buy this property. What are the minus points that you want to say? So you have to be a master in reading the law. Here, I want to tell a very peculiar case. My patient is, whenever I am going for any audit, so particularly in bank audit, because I am again referring the bank audit, because it's where the report starts, because only after the audit the report starts. You have to certify that the property value, the bank has got a very good title cleared property. So I have read in my lifetime more than 7 lakh legal opinions, more than 7 lakh documents I have read. So I can form a legal opinion. Normally, whenever you are seeing any legal opinion, don't go by the legal opinion. You can refer the legal opinion. You can refer, but you cannot rely. This is my view. You can refer the legal opinion. You cannot rely the legal opinion, because sometimes the few panel advocates may commit some mistakes. So in order to safeguard the bank's funds, we have to do the opinion, do the valuation, do the legal reading correctly. So normally, you should know what are the documents the banks they have to obtain before giving the loan, because they want to buy a property, because banks, they are financing the borrower to buy a property. So it's an investment for the buyer, for the company. So what are the documents you have to verify? That list you must know. So original document, then parent document, then above that revenue records, Patta, Chitta, Adangal, Kandayam. Then above that, then go to house property tax receipt, as well as to the demand extra register copy. Then whether it is legally approved land, that is whether it's a Porambok or not, you have to go and see the town survey plan or FMB sketch. Then take the encumbrance certificate for 30 years if the property is occurred through some interest rate, that is without writing the will, if they got it, then you have to go for the death certificate and legal hardship certificate, everything. So you should know what are the documents you need. So my patient is, so I went for a credit audit. They want a specific certificate, specific reporting certificate saying that please ensure that the property is legally enforceable. So for this you have to give a report. So when you have to give a legally enforceable certificate, you have to do your working. So the property, I went for the year 2019. The bank has sanctioned a loan in the year 2018, saying that the company has got a extent of 6.49 acres of land with a spinning mill, with all the mills it has got. Yes, first thing, they have sanctioned the loan based on the legal opinion, based on the valuation. They say that yes, the company has got 6.49 acres of land and they have sanctioned 14.40 crores. So my style of practice is, style of audit is, I never rely on the opinion. I refer the legal opinion, then started to form a tracing of the title. When I traced the title, it went to the year 1983. Because the company has purchased the land in the year 1983, but I went for the year 2019. When I went for the year 1983, I found that the company has purchased a property worth of only 3.49 acres. But the bank has sanctioned the loan saying that it is 6.49 acres. 6.49 acres of the properties are available. It is reported by the advocate, it is reported by the valuer. But when I scrutinized the document, I found that the company has got only 3.49 acres. That means there are 3 acres of land, there was no document at all. But the bank, they wanted you to report that whether this property is legally enforceable. Okay. There I found that there was no document for 3 acres. Then when I asked the manager, sir, please apply for the encumbrance certificate for the year 1983, there they found that 3 acres of the land have already been mortgaged with some financial company. But that company has gone. It was not there in existence. But the bank has assumed that the company has got 6.49 acres. 6.49 acres of lands are there in possession, but the title is only for 3.49 acres. So can you report that the company has got the proper, whether the company has got the legally enforceable title? No. It is available only for the 3.49 acres. I went further. Then I asked him to do the survey. When they did the survey, the land that is the property of 3.49 acres are being situated in the middle of the land. That is called as landlocked property. There was no passage to the property. So then I said the property, there is no property value for this document. Now the case has been, the party has liquidated the company and they repaid the loan. But the reporting, that is liquidation, starts based on my report saying that the property has got no title over the property. So it is investment decision, investment in property decision have to be properly disclosed. So here the NAS 40, that is para 75 says disclose accounting policy towards measurement of investments, then disclose the depreciation method. That is also very much important. Which method you want to report, straight line method or WDV method, which depreciation method you want to report, that should be covered in the accounting policy. It is clearly stated in AS 40, NAS 40 and para 79. But the auditors, few auditors, I cannot blame all auditors, few auditors, they never mention the method of depreciation in the financial statement. If that is there, it is subject to FRRB review. Because FRRB, a technical reviewer, if he is reviewing it, he can report this point. It's a common mistake. So you have to mention the accounting policy. Also, you have to mention the depreciation methods. This thing, normally we are doing it, but in financial statement you have to give a specific thing and you have to mention the Indian accounting standard number as well as para. Next thing is disclosure of rental income and direct operative expenses. So you have got lot of properties. For each and every property you have to incur some expenditure. You have to specifically relate those profit or income earned from the property separately. You have to give the report. That is, it covers NAS 40 para 75F. It says disclose the direct expenses including repairs and maintenances arising from the investment in property. But few auditors, they are not giving this. So you have to be very, very careful because this is a common mistake committed by the chartered accountant. So you have to give a separate income according to each property, separate expenditure according to each property. You have to give the report. NAS, next third thing is with reference to investment in property, NAS para 30, you have to adopt accounting policy of the value of cost. Normally what we are doing in balance sheet, we are giving only cost, but they also want you to give the fair value. Fair value of the property also you have to give. That is according to the para 32 of NAS 40, you have to give a disclosure with reference to fair value of the property. It is not covered by the auditors in his report. So what is the fair value? From where we can get? How we have to certify that this property is valued? This is a fair value or this is a market value. From where you can get? From the valuer. So valuer, how many values they are giving? They are giving market value, realizable value, forced sale value, guideline value. Now it is in liquidation value. Now they are giving liquidation value. If you are going as an insolvency, if you are going as a valuer under IBBI, you have to give a liquidation value. And the value of the property method also you have to be a master. So in roadside, you have got a very big property. In roadside, the value of the property for 100 feet, it contains one rate. Beyond 100, another rate. then another 100 feet, another rate. So it's a layer method of value. So in the report also few values they are giving the layer method of values. So that also you should know. So you have to be a master in reading the valuation report. So there you have to give the fair value. If you want to give another value, so this is a market rate, I relied on the certificate, but whenever you are giving any certificate on the financial statement, whenever you are giving report, you have to give all the values and you have to give a proper explanation that I have relied the chartered engineer's valuation, because you are not a master in giving the valuation, so you have to give the certificate. Performance obligation for performance obligation and its description. So this is being covered by NAS 115 paragraph 119B. Disclose performance obligation in contracts with the customers, including payment terms. This is very, very important. Recent times. Why? Because after the introduction of section 43BH, this payment terms plays a very vital role. Because regarding MSME, this is a very, very important section that you have to see. Section that is in AS 115, para 119B. That is, you have to give all the disclosure with reference to obligations in contracts with the customers, because 43BH. And another NAS 115 para 119B, it also says disclose significant in payment in financing component. So before giving this, you have to see whether the company has prepared the cash budget or cash flow statement correctly or not. Based on that, you have to give a report. So this is another common mistake that's being committed by the chartered accountants while doing the financial reporting. And next thing is accounting policy for revenue recognition. So NAS 115 prescribes there are 5-step model for the revenue recognition. Identify the contracts with the customers, identify separate performance obligations in the contract, determine the transaction price, allocate the transaction price to separate performance obligation, recognize revenue when or as each performance obligation is satisfied. Normally what we are doing, we are doing all the contracts put together. We are doing all the expenditures put together. In total we are saying we have got a profit in total this much. But this 115A says you have to do the working according to each contract, and you have to analyze each contract's expenditure. You have to arrive at whether it's a profit or not for each and everything. You have to give a proper disclosure in the financial report. And regarding this, you have to state that accounting policy of the company. Few auditors, they are not giving the point in the report. Next is disclosure and revenue recognition. That is NAS 115 paragraph 114. It says disaggregate revenue recognized from contracts with the customers. Revenue recognition as stated above affected by the economic factors with reference to nature, amount, timing and uncertainty of revenue and cash flow. And 126 AA paragraph said reconcile the revenue recognized in profit and loss account with reference to each contract separately. So their intention is that you have to give a separate analysis for each and every contract. Here I want to tell one very big case which has happened in the Dharmaburi area. Even it has happened in mines. So previously all the mines holders they earned like anything, because they made a contract with the others saying that we will export this much of granite to you. Suddenly the government has come out with a policy that no, your area of operation is limited only to this extent and you have to pay only to this depth you have to go. And all these mines contracts have been scrutinized by the government, and suddenly there was a stoppage of business. So in one particular contract, particular area, he has earned a very huge profit. And one particular area where suddenly government has imposed a huge fine, that contract goes into loss. So, according to this disclosure of revenue recognition, you have to give as separate items, separate each and everything you have to give separately for each and every contract. So the contract which I done at Dharmaburi is earning a good profit. The contract which I done at the Krishnagiri, we are incurring loss. So this has to be properly displayed in the financial statement, because the financial statement is being read by the shareholders of the company or the government officials and everyone. So as an auditor, you have to see the revenue recognition is done properly or not. The extent of risks and rewards transfers. So here they are giving ownership transfer, ownership of assets. So there is one very big transport. I think I don't want to mention the transport name. For each and every place you can find the transport. You are owning a vehicle. You are indirectly you are saying that this is the company's bus. You are owning the vehicle, and that bus company has got a very big goodwill in the market. Say A company, we can say A company, but you are not having the customer, but you have got the power to invest in the vehicle. You have bought the vehicle, you are given the vehicle to the company. So just like that, it's a Binami ownership. So they say that this bus is owned by company A, but actually the bus is not owned by company A. So transfer of ownership, but they say that all the benefits go only to the A company and not to the owners. So this is if this is the case, then this has to be clearly mentioned in the accounting policy of the company. So here AS 115 you have to see. Terminology for related parties. That is in AS 24 says terminology used by the company in the statement is relative of KMP, but as per in AS 24 it is to be mentioned as close member of key management personnel. Normally we are saying that relative of KMP in the report, but the NAS says that you have to report as close member of KMP, key management personnel. You should not mention the relative, that is, you should not mention the close member of KMP as relative of KMP. This is a common mistake we are committing. What's the definition of KMP? Key management personnel. It's being covered by NAS 24. That is, key management personnel are those persons having authority and responsibility for planning, directing and controlling activities of the entity directly and indirectly, including any director, whether executive or otherwise, of the financial entity. So in the report, you have to say that all the directors are KMP. You are not supposed to exclude any director, whether it is executive director or non-executive director or independent director. All are you have to report as executive. You have to report as KMP. So in financial reporting, only executive directors are considered and not the non-executive. So whenever you are giving any financial reporting of any company, you have to mention all the directors under KMP definition, and because it has, you should not contra the NAS 24. It's a violation of NAS 24. Auditor has to report, otherwise it's he has failed to observe, then you are answerable to FRRB. Related party disclosure, again NAS 24 comes into the picture. Disclose related party relationship, only control exists irrespective of the transaction took place or not. So you are a director but you are not taking active part in the decision. Whether you are taking the active part or not, you have to report that all the directors are the related party. All the directors have got the related party relationship with the company. The reporting is much needed for the users of the financial statement, as the control of the related party affects the independent decisions. So normally we are reporting only the executive director as, we are considering only the executive director as the related party, but all the directors you have to report as KMP, and few auditors they are not covering this part. So in AS 24 you have to undergo. Disclosure of transactions with the related parties. Here I want to start with again with the bank. One case study I will tell. Normally whenever you are going for audit, there is a data statement is there. In data statement, what are the things that you have to see? You have got total data. While arriving at the drawing power, you have to say that total data less. You have to eliminate the associate data or sister concern data. Only the remaining amount you have to see. So the associate data and sister concern debts are the related party transactions. All those you have to remove. Here, just like it's a holding company and subsidiary company, common points you have to remove. So that is there. That is covered in the Ind AS 24. Disclose all the related party transactions that have taken place during the period of audit. Disclose the nature of relationship of the related parties. In AS 24 para 17, minimum disclosure is required. The amount of the transaction you have to mention, terms and conditions secured or not. Normally whenever any loan or whenever any transaction that took place between the related parties, no security is required. This you can find from the chit companies. In chit fund companies you can find this. So if you are doing any reporting of any chit fund companies or any finance companies, if there is any loan given to the directors of the company, you have to compare the interest rate. Normally the interest rate will be less than the market rate. So that point you have to cover. And even for the private party you have to take the securities, but for the directors they are not taking any securities. So if that is there, you have to give this, you have to report this point in your report, that is in the financial statement you have to cover that point. And details of the guarantee given or received. So what are the guarantees that you have given, what are the guarantees that you have received, that also you have to give the report. Here since it's a guarantee, I want to tell the 6 commandments which you have to follow, not only for this FRRB, for your personal life I want to tell, because it's a dry subject, it's a very good, everything is in AS, everything we are doing in the audit just for, I want to deviate some 2 minutes from the subject. First commandment which you have to convey to your client, your daughter, your son, your friend, everything is, first commandment is, don't give loan out of loan borrowed. Kadan vaangi kadan kudukadirgal. Just I'm refreshing because I'm going on speaking in AS. Just want to shift your mind to some other topic. Kadan vaangi kadan kudukadirgal. Next thing is, since I have seen the word guarantee, life la yaarkum guarantee podadinga. This advice you have to give to your daughter or friend. Otherwise, don't give any guarantee to anyone. But if you want guarantee, you can get from others. So second commandment. And third one is non solla kathukanga. Sorry, no. But actually in the meeting I call பண்ணும்போது நான் நோன் சொல்லியிருந்தேன்னா இங்கே வந்திருக்க மாட்டேன். But இது நல்ல ஒரு opportunity. And also, sir has got 17 years of experience. Sir, I want to tell one thing. This is my maiden attempt in presenting this topic. And I have spent some 4 days to prepare the topic. And I'll start my entire office work and concentrate on this. It's a very good ocean. It's a very good topic, very good ocean. And whenever I read the entire provisions of this NAS, I recollected all my professional memories. So I request the members, please concentrate on this. So, notes solla kathukanga. Letter pad paathu yamaradinga. Show. Neriya per don't get trapped by fancy and respect others' time. Mattama neratha namba மதிக்கணும். And sixth one is ignore your ego. So to win the race, you have to ignore your ego. தமிழ்ல சொல்லணும் அப்படின்னா, சாரி தப்பா நினைக்காதீங்க, நமக்கு சூடு சொன்னே இருக்கக்கூடாது. நிறைய இடத்துல இது வந்து ஜெயிக்கலாம். பட் ஒரு சிலர் இதுக்கும் என்கிட்ட வந்து கேட்பாங்க, இதெல்லாம் இது இல்லாமல் நீ பண்ணுறீங்களோ மனுஷனான்னு கேட்பாங்க. நான் சிரிச்சுட்டு பேசாமல் போவேன். ஏன்னா நான் ஐ எம் ஃபாலோயிங் ரூல் நம்பர் 6. ஸோ ஜஸ்ட் டு டைவர்ட் த mind, just I have taken, since I have seen the word, details of the guarantee given or received, that also you have to disclose. Transaction between the holding company and subsidiary company to be disclosed separately. So that is also must. You have to report, give a report with reference to the holding company transactions and subsidiary company transactions. It's not being covered by the auditor, then you are whenever any review is being undertaken by the FRRB, you are answerable. But this is one of the common mistakes. Next one is disclosure relating to KMP. It says NAS 24 para 17 says disclose compensation in total and for each of the following categories. So short-term employees, post-employment benefits, termination benefits, share-based payment, not disclosed. It's all not disclosed in financial statements. It's not being covered by the auditor. So this is also another thing. So that means whenever you are preparing any financial statement, you have to report the short-term benefits, employee benefits, post-employment benefits. That is after retirement, what the employees they are receiving, and long-term benefits. What is the long-term benefits that the employees are receiving? What's the termination benefits? Then share-based payment. That is what the payment is being made to the employer. My son-in-law who is in US, it's a startup company. They offered two things. One is whether you want this amount of cash or whether you want the share in the company. So he preferred the share payment because he has taken some risk. So now the share of the company has grown more than 20 times. That is than the benefit. So what is the real share-based benefit that is there? Normally Infosys, some employees they have given the shares. What's the real benefits that the public has taken from the share payment? So that also you have to disclose because if KMP has received these benefits, then you have to disclose everything. That is events occurring after date of balance sheet. So where we can concentrate on this events occurring after the date of balance sheet. Any example? Again I am going to bank. Because it's all reporting in bank because we have to report as per the Banking Regulation Act. Can we consider the events occurring after the date of balance sheet with reference to NPA? Because as on the date of balance sheet, that account has become NPA. After the balance sheet date, the amounts have been remitted, then the account has become NPA. Can you classify that account as NPA or not? So you have to give a report, audit report, saying that this account is NPA or not. So as on the date of balance sheet, it is NPA, but after the balance sheet, before you complete the audit, that account has been closed by the customer, or that account has been paid up to date by the customer. According to me, you need not classify that account as NPA, but you have to give the observation in the main report. It should not be reported in long form audit report. You have to give this observation in the main report. Because in one of the cases where I have taken this decision, and it has happened in a scheduled bank. This year I have classified that account as it's not an NPA, and I have given my observation in the note saying that I have reported that this account is not NPA because the party has come and closed the account. But within 15 days after the completion of the audit, the RBI team came and they said that no, you have to take the cutoff point as the date of balance sheet and you should not go beyond that. And the auditor has not applied his mind. The comment he has passed, the auditor has not applied his mind. And luckily I got the audit for this next year for the same branch. Then I reported the RBI team has not considered this point, so they have not applied this mind by reading the audit report. It's all words we have exchanged. But you can consider even the events occurring after date of balance sheet, but with a proper note you have to give a report in your financial statement and everything. Otherwise you will be in trouble. So you think that this is correct, but you are not reporting, because you are not given any substantial remarks in your report. So events occurring after date of balance sheet also you can consider. This is covered in NAS 10 para 19. Information received after balance sheet that is relevant to be reported and the transaction in existence, but the auditor has not reported, so it's also a common mistake. So events occurring after date of balance sheet also you can consider, but if you consider events occurring after date of balance sheet, you have to give a report.
Suppose if it is not
So-
a material item.
So you can, even if it is not material also, if you are considering events occurring after date of balance sheet, anything you have to give the reports, because that will help you. Your view?
Which report you can do?
Sir?
Which report you can do?
We have to report the main report. So in audit report, main form is there. In that format, you have to add that point, because to be on the safer side. If you give this in the LFAR, you can say that I have given this point in the LFAR, so I have not covered this. I have given in the additional report I have given, so I am not answerable. But in order to safeguard your certificate or any view, it is best you can give the observation in your main report. This is my experience. Maybe some members they may want to take the risk, but to be on the safer side, I am telling this, sir.
What if we give on LFAR and other comments on the last point?
Sir, LFAR can be viewed by the bankers only after the completion of the audit, that too after December. So it is only an internal inspection report. That the important thing you might have observed in LFAR, but that has not been taken care of by the central statutory auditors. So only when you cover this point in the main report, you can your views can be taken.
During the other case where...
Sir?
During the other case, the vice versa, for example, after the audit date, closing of 31st March, if the entity goes into a loss or it's closed, that also can be reported.
Yes.
That also can be reported as an NPA. That is a material one, and then it need to...
That's a material one. So in my case, as on the date of balance sheet, it is NPA, but the account is closed. In your case, the company went into loss.
As on the date of balance sheet, it's a performing asset, but subsequently during the audit, you would find out that it is...
You have to report. You have to report the main thing, and with the explanation, with the proper explanation, you have to report. Sir, our role is to save our certificate. Suppose if the insured asks, all the CS have to write the examination once again. Can you write? Can we pass? So youngsters, they can challenge that I can pass, but seniors, I mean, just like person like me, I cannot do it. It's not possible for me to do it. Even for this, I want to go for another very lighter.
Even after so many years, we're getting the terrific dreams of writing the exams.
Sir, our profession says every person who has cleared the chartered accountancy course should have got the depth knowledge in the subject. How many of you have cleared in the first attempt here? 2, 3. Second attempt? 7 attempts? 7 attempts. 6. Okay. 8 attempts.
He has got
9th attempt. I cleared the examination in the 9th attempt. In the lighter sense. So don't mistake me. In the lighter sense. Who has got the depth knowledge?
You have more depth knowledge.
Because I have read the book 9 times, but Sir read the book only once. Just for the lighter sense.
We are reading again and again last 20 years.
Sir?
We are reading again and again last 20 years for all the resources. For the FRRB.
Okay. So just for lightness, even wherever I go, even in one of the examinations, when you are a valuer, where the examination and one of the papers, just for to make it lively, I want to tell the thing. What is meant by a qualified audit report? Because that is also part of FRRB financial reporting. You can even give you the financial reporting in a qualified manner. What is meant by a qualified audit report? It is a report given as subject to, correct? Everything is correct, subject to. But one of the students, he has written the examination saying that qualified audit report is a report given by a qualified auditor. So that is the quality of that student, but I cannot blame all. So depth knowledge, qualify, I mean, these are the things when you value, even youngsters, you have got a very big opportunity, be an examination valuer. You have got a very good, when I, previously when I value the paper, they paid me only 30 rupees per paper. Now it is 200 rupees, I think, I hope. So per paper 200. So you will be given some 300 papers or 400 papers. So just for 1 month, you can earn 60,000 rupees from our institute. Okay, coming to the subject, cash and cash equivalents. Cash and cash equivalents not available for use by groups. So it is being covered by Ind AS 7, para 48. Amount held by the entity but not available for use by the group, but means they are not able to use the funds. Cash equivalent, cash, you know it. Cash equivalent means you can easily convert that money into cash. What are the items that are covered by cash equivalents? Are treasury bills, treasury notes, commercial papers, certificate of deposits, money market funds, cash management. Here for this cash equivalent, there is one movie recently has come based on the cash equivalent. One movie now it is going on the thing, Lucky Bhaskar. There that share scandal has taken place because of that paper, commercial paper. What is a certificate of deposit? Anybody has got any idea about certificate of deposit? Fixed deposit, you know. Whatever money you deposit, that is fixed deposit. What is certificate of deposit? Suppose Canara Bank, they are investing the funds in State Bank. State Bank, they are issuing the receipt. That is called a certificate of deposit. It's a transaction between the financial institutions. So you can encash it immediately. So that is why they are saying that as instead of a bank balance, they are saying the certificate of deposit as cash equivalent. So treasury bills, you can go to the government, you can realize the money at any time. So you can go and make a deposit in the treasury. So these are all coming under the category of cash equivalent. So whenever you are preparing the financial statements, you have to give these things separately. And gold is not a cash equivalent. Gold is not a cash equivalent. Now yesterday we got a very big news that some 1,000 billion tons of gold has been identified by one country which is near to our India. China has identified. It's very big mines, gold mines they have identified. Here, since I touched the gold thing, I want to give another professional opportunity to the members. Dora Gold license. Have you heard about Dora Gold license? I think seniors, they may know. Dora Gold license. So this license, because gold is not allowed to be imported into India, it has to be only some 7 organizations, 7 institutes, they are allowed to import gold into India. But if you got the Dora Gold, you are allowed to import gold mines sand. Tanga Suragatin Manalai Ningal import Seidu. You can do the lab activity, you can segregate the gold particles, you can manufacture the bullion. And the Tanga Katti. So that Dora Gold license, if any of your jewelry clients they want, or even you can motivate your jewelry clients to get the Dora Gold license, that license you can get only from the DGFT of New Delhi and not from any other sector. The minimum fees you can earn is 1 lakh. Dora Gold license, but there are so many intermediaries are there, then you can get that license. Even suppose if any of your clients are jewelry owners, you can ask them to go for the Dora Gold license. So you can also help the clients, you can also help your practice. So here gold is not to be treated as cash equivalent. Management has to disclose the same in its financial report. So management has to report this and you have to certify it. If you are not certifying this financial report, then this point is being referred to FRRB if they did the review. And cash flow on the cash flow on net basis. See, process of term loan repayment were disclosed on net basis in the cash flow. Loan amount received on the asset side, loan amount repaid. You should not net the figure. But in most of the financial statements, they are netting the figure. So loan amount received, you have to give on the receipt side, loan amount paid on the payment side. So you should not net it. So purchase and sale of investment between the subsidiaries also they are giving in net figure, that should not be there. Then sale and purchase of property, plant and equipment, that also they are giving in net, that should not be the case. You have to give the gross separately and payment separately. So it is being covered by Ind AS 7 para 21 and the auditor has reported the net basis instead of gross basis. You have to report it separately. So in one of the, so here it is there, but this netting is done by a person who is called as auditor. We are all accountants because we are chartered accountants, but they are the auditors. What they did, he has netted the capital in one of the cooperative societies. Share capital is there. The society has incurred a loss. He has adjusted this loss against the capital and he has put the society in a loss manner. So the society has got no capital at all. He has netted the capital with the loss. It should not be the case. So capital should be there and loss should be reported separately. This is for your information. Suppose we are going for any cooperative audit, don't net the capital with the loss. So people they are doing that also, you should not net the figure. So you have to give the gross figure. And disclosure of changes in liabilities. It is being covered by para 44 of Ind AS 7. Changes in liabilities arising due to finance activities from cash flow and non-cash flow charges. And do the reconciliation for the above changes in the financial statement. Company has not disclosed because any changes in liability which arises due to financing activity. Suppose you have borrowed the money from one party and there will be some book adjustments, that is non-cash flow changes. That may also reduce liability or that may also increase liability. That also you have to do the reconciliation, you have to do separately. But few auditors they are not covering this point. This is also the common, one of the common mistakes in the financial statements. The terminology. Next one is reconciliation. Sorry. Cash flow statement, now it is very much important because all the companies they have to give the cash flow statement, whether it's a private company or public company, but you have to submit a cash flow statement. But they are saying that it is not cash flow statement, it is a statement of cash flow. This is a terminology you have to use as per paragraph 45 of you have to, in AS 7 you have to report the word statement of cash flow. Normally we are using the word cash flow statement. So it is against the Ind AS. So you have to use the word statement of cash flow and not cash flow statement. This point you have to remember. Normally this is a common mistake. Few chartered accountants they are doing it. And also you have to do the reconciliation of cash and cash equivalent. Do the reconciliation of SCF, that is statement of cash flow between the cash and cash equivalent. But most of the auditors, they are not doing this exercise. The next one is interest and dividends. You have to give a separate working in the cash flow statement. That is, in few companies they are giving the consolidated figures, but you have to give it separately. So interest and dividends paid to be reported separately and not on consolidated basis is being covered by Ind AS 7 para 31, and interest paid to be reported separately in statement of cash flow as financing activity. Interest received to be reported separately in SCF from the investment activity. That is, interest paid you have to report under interest, that is financing activity. If you receive any interest, then it has to be covered under investment activity. So dividend paid and dividend received to be reported separately. You should not give a netted figure, and auditors have to report it, have to report the same accordingly. So here, interest paid in the cash flow statement, that is statement of cash flow, you have to report as the financing activity. Regarding the interest received, it has to be carried as net, it has to be carried as investment activity. Regarding interest, dividend paid and dividend received, you should not give a net figure, you have to report it separately. Here, NAS 739 says, deals with the effect of obtaining control or losing control of subsidiaries in statement of cash flow. So this NAS says you have to cover the point of obtaining control and losing the control in the statement of cash flow. So in this you have to disclose the total consideration paid or received, portion of the consideration considering the cash or cash equivalent, the amount of cash and cash equivalent in the subsidiaries or other businesses over which the control is obtained or not, the amount of assets and liabilities other than the cash and equivalent in the subsidiaries or other than other businesses over which the control is obtained or lost is summarized by each of the category. So that means in statement of cash flow, you have to specifically mention by way of transaction between the subsidiaries whether you have obtained the control or not. That's being covered by Ind AS 7 of paragraph 39. Components of cash flow. Here in financial statement, deposits with maturity of over 12 months have been included, whether it's correct. That is, any deposits less, they say that it's a short term, less than 1 year you can consider as cash equivalent. If it is more than 12 months, it should not be treated as a cash equivalent. Auditor must know what is cash and cash equivalents, otherwise the report is wrong. So if the value of the cash equivalent is more than 12 months, it should not be covered under the point cash equivalent. Next one is dividend distribution tax. In AS 7, para 31, dividend paid should be classified as cash flow from the financing activity. You are paying the dividends, so it's a finance activity. When you receive the dividend, it's an investment activity for you. Suppose if your company is receiving, it is an investment activity. But when you pay the dividend, it comes under the category of financing activity. So DDT is omitted, that is dividend distribution tax is omitted in statement of cash flow. If that is there, then it is a wrong thing. Then the auditor has to be very careful while preparing the financial statements. EFC. That is export earners foreign currency account. That is Ind AS 7 para 28 deals with unrealized gains and losses from EFC should not be included, because you have got your money in EFC account, but suddenly the value increases, so suddenly the value comes down. So you should not include the gain or loss in the statement of cash flow, because it is not an actual gain. Only when you sell it, you will get a gain. So to reconcile the cash and cash equivalent, effect of exchange rates to be included in the SCF. Sorry. To reconcile the cash and cash flow, effect of exchange rates should be included in a statement of cash flow. Point 2 to be reported separately, that is regarding the cash and cash equivalent, you have to report separately. The details have not been mentioned in financial. If the details have not been mentioned by the auditor, then the financial statement reporting is wrong. It's a common mistake done by the auditors. Presenting next is advance taxes are included under the head loans and advances and provision for tax under the provisions without offsetting the two amounts. Is it correct? Advance tax you paid, but there is a provision. Can you offset it? It's wrong. Cannot without offsetting the two, then it is wrong. So you have to, if the AS 12 is not fulfilled, then company should not disclose the net of tax. You have to report it separately.
Usually we report separately. Only subsequently when we receive the order we adjust it.
We adjust it. Presentation of deferred tax liability assets in the consolidated financial statement. There is asset in AS 12 para 74. It offsetting deferred tax and deferred tax liability only if it is a legally enforceable right to do the same by the company. Deferred tax assets, deferred tax liabilities levied by the same taxation authority and not by another tax authority. So deferred tax liability or deferred thing can be done from the income tax department separately, from the VAT separately or GST separately. You cannot net the figure. Suppose if it is an income tax, you can net the figure. Income tax thing you cannot adjust against the GST. So if it is done by the same taxation authorities, you can net the figure and not with the other thing. So if IT with GST should not be done. Specific requirement is required from the chartered accountant. You have to give the specific thing in the financial report. It's a common mistake done by the chartered accountant. Offsetting of DTA and DTL. That is para 74 of in AS 12 says entity offset DTA with the DTL only if it has got a legal enforceable right, tax levied by the same taxation authorities and not by the other authorities. That is GST tax you cannot register against the income tax. So specific requirement is required. So you can offset, but provided if it is within the same taxation authorities. Here in AS 12, paragraph 82, it requires specific requirement to disclose convincing evidence. An entity should disclose the amount of DTA and the nature of evidence supporting its recognition when the utilization of DTA depended on future taxable profits in excess of profits arising from the reversal of the existing taxable temporary evidence, and the entity suffered a loss in either or preceding period in the tax jurisdiction to which the DTA relates, the auditor has failed to report. So you can offset provided the reversal is correct only against the surplus. Sir. Sir, another report from the banker's angle. As it's also another case study I want to say. It is also liable for not only for FRRB, even for the RBI also. The RBI says within 30 days, if you make any complaint against a bank, if the bankers they have not rectified the thing, you can report to RBI. See, in one of the cases of mine, I have done the interest working for the client. I found that the banks, that bank has excess charged 1.31 crores. 1.31 crores they excess charged. At the time of closure, the banker has received all the interest and they closed the loan. But when I did the reconciliation, when I did verify the interest, I found it is 1.31 crores they excess charge, and till now I have calculated interest on interest at 1.31, then the amount comes to 2 crores. I made a complaint. I reported that your excess charged 1.31 crores plus interest. Apart from that, you have to give 2 crores. This is applicable up to 31st October 2024. After that, please pay me 24% interest on that 2 crores. This thing I have given the thing. But the previous auditor, the previous concurrent auditor has reported that all the interest charged by the bank are correct. So I worked out in a different manner that the bank has to pay 2 crores, 1.31 plus interest on interest, they have to pay 2 crores. Now the bank has gone to RBI. Definitely RBI, if this is there, if my working is accepted by the bank, then the bank, they have to pay some huge amount of penalty to RBI, because they have taken the money from the customer in the form of interest. But the previous auditor, the statutory auditor, the person who has done the stock auditor, the person who has done the concurrent auditor, all are being questioned now. Why you have failed to report? Why the bank has charged excess interest? Now that the party claimed it is an excess interest, why you are not reported? Now the bankers, now they issued the notice to the charter accountants, and simultaneously they refer the matter to the institute also. So now it is not only the income leakage, but excess interest paid also we have to report in the bank. It is not only the bank, even the financial institution also you have to report. So that is one thing. Next point is disclosure provisions. In NAS 37 paragraph 84 and 85, each class of provision disclose the carrying amount at the, normally what is the opening balance, what is the closing balance that you have to give. Normally we are not giving. And what is the addition to the provision that you have to add, what is the amount used. It is nothing but P&L appropriation account. Opening and closing, what is the amount credited, what is the amount used, and what is the proper provision that you have to make, that also you have to report separately in the financial statement. But few auditors, they are not doing this. Even few companies, they are even not preparing the P&L appropriation account. So this is what they want to say about this in AS 37 paragraph 84 and 85. Property, plant and equipment, it's accounting policy. So what are the records that you have to maintain for this PPE? Property, plant and equipment in a factory, in a company. You have got your property. What register you have to maintain? That has to be clearly spelled in your accounting policy. What's the register? Property, plant and equipment. I want to give one suggestion. These two registers you have to maintain for all the companies. One is stock register of the property, plant and equipment you have to maintain, and another one is layout register, where you are kept. What is the first machine, what is the second machine. So wherever you are going for any type of audit, whether it's a manufacturing company audit or bank audit, and any type of audit, if you are going for any inspection, you have to ask for the stock register of the unit and stock register for the property, plant, equipment, even for other stocks also, and layout register. The layout register, most of the companies, they are not maintaining. So that also you have to give in your accounting policy specifically. Again here they are coming with a specific thing as nomenclature. Which term they have to use? Observe that tangible assets nomenclature is used instead of PPE. Observe that fixed asset nomenclature is used in the instead of PPE. That means in AS 16 says you have to use the term property, plant and equipment. It should not be written as tangible asset, it should not be written as fixed assets. So auditor has to report separately. You have to be very, very careful for this point. You have to give a separate thing with reference to PPE. PPE you have to disclose and not as tangible assets, not as fixed assets. So nomenclature, that is also a common mistake made by the chartered accountants. Expenditure during the construction period. Proper accounting, up to the date of construction, it has to be any expenditure up to the date of construction, it has to be capitalized. So observe that accounting policy includes indirect costs and other incidental costs which were incurred during the construction period as capital. It should not be treated. That is indirect costs and other incidental costs that should not be part of the asset. So, but they are treating those costs as the capital expenditure. That is wrong. So they have to. The auditor has to do the working very correctly. So up to the date of construction, whatever be the cost directly involved into the asset, you have to capitalize it. (139B) in AS 19. Disclose risks associated with the investment in plan assets without proper disclosure in the risk financial statement. So whatever money that you have invested in any financial planning, you have to report separately. So all this risk you have to give a separate thing, or what are the risks and all that is being discussed in the separate slide. So auditor has to make the report separately. Director sitting fees, where you can write. Normally we are writing the director sitting fees in the account. Where you have to write. Whether you have to write the director fees under other assets or employee benefit expenses. In AS 19, paragraph 7 says, report director fees under the head employee benefit expenses. And director fees are included in other assets. Normally they are saying director fees, they are writing as other expenditure, other expenses. That is wrong. So key management personal remuneration has been included in the sitting fees. In few cases, it is not KME, it is KMP. Key management remuneration has been included in the sitting fees, so auditor has to report it correctly. So they say that where the director fees is reported, they have to report under the head employee benefit expenses, because directors are employees of the company, and you should not write it as other expenses. So this is specifically mentioned in AS 19 of paragraph 7. The next one is defined contribution plans, that is disclose the amount of recognized as expenses for defined contribution plan, that is you have to report separately for the PF contribution and report the same thing correctly by the correctly in the financial statement by the auditor. And also my suggestion here, once again I want to tell you, please practice in the Provident Fund Act. That's a very big area wherein you can concentrate practicing. And in AS 19, recognize appropriate recognition and measurement of employee benefits. Employee benefit in the nature of gratuity was also classified as a short-term employee benefit with no explanation as to the reason of such classification. Report it correctly. Here, employee benefit, that is nature of gratuity. Gratuity should not be considered as a short-term benefit. Gratuity is a permanent, long-term benefit. So you have to report it separately. That is what this audit in AS 19 says. Next one is amortization. In AS 38 of paragraph 104, that is review life of intangible asset with amortization period and amortization method for each financial year. Non-recognition of amortization period and amortization fund are observed in financial statement, report correctly. So you have to review the life of the intangible asset. What is the life of the tangible asset? You have to first ascertain the life of the intangible asset and what is the amortization period, what is the amortization method, how it is being reported in the financial statement, that you have to give specifically in the financial statement. If it is not there, then the auditor has to cover that point in his report. If it is not there, then the auditor has failed. It's a common mistake done by the chartered accountants in reporting the financial statements. Next one is intangible assets with indefinite life. Intangible assets, whether any intangible asset with indefinite life. Intangible asset is normally it is goodwill. So without any goodwill, normally we are buying the goodwill for 5 years or 10 years. Or even in chartered accountant practice also, if any member died, his firm is being sold to another firm or another person with a confirmed life, say 5 years or 6 years, they are entering into the contract. So that is with a definite period for the goodwill. And if it is a lifelong you have to pay, now that means there is no end. So it is an intangible asset with indefinite life. So if that is the case, then how to deal? Here in his 38 paragraph 108, 38, 118A paragraph 91 says it should not be amortized. It should not be amortized. So report so it should not be amortized, and normally few members they say that it is infinite. The life of the asset is, they are saying that it is infinite. That should not be the case. So if there is any intangible asset with indefinite life, it should not be amortized. This is a concept of NAS 38 and paragraph 107 38. Now amortization of intangible assets, the terminology is intangible assets, use the term intangible assets as amortization and not depreciation. So it's a difference. Report it correctly and report by the auditor. Here I stop the
Software should not be included as under depreciation. Software what we develop is an intangible asset, right?
What's the life?
Like maybe say 5 years or 10 years, depends.
It's a definite period.
No, but you mean to say that you cannot claim, you cannot say that as a depreciation on intangible asset, but it has to be said as amortization.
Cannot claim any depreciation on the intangible asset.
It is an amortization.
It's an amortization.
Generally software also they include along in the depreciation schedule. Most of the companies.
They are including. You have to give the reference, sir.
Depreciation and amortization is the difference.
It's different.
That's the common.
Now, so they are using it, but as per this NAS 38, you are not supposed to use the word depreciation because it has to be say that's amortization for the intangible asset, because software you cannot see, it's intangible. So some 115 NAS are there, common mistakes. So here just so this is also another important point, that is trade payable aging schedule. So in all your financial statements you have to report the trade aging payable, because that is there for 43BH. This plays a very vital role. So that has to be reported as per the Schedule 3 of the Companies Act of 2013. Now I am going to just touch the non-financial information, which is also played a very vital role in the financial reporting. For this I want to say about the 4 things that you have to follow, not only in financial statement, in all types of practice, everything. One is each and every financial statement you have to cover the point of SWOT. We know SWOT. So in all, it's a non-financial information, but you have to cover the point of SWOT: strength, weakness, opportunity and threat. This is the first thing. In each and every financial statement, under the head non-financial information, you have to report about the company SWOT. And second one is SAPE, S-A-P-A-E. What is SAPE? So, whenever any new company has come into the picture, or whenever the company has started any new projects or new products, you have to clearly explain about the SAPE. That is survey, analysis, planning, action, evaluation. Survey, analysis, planning, action, evaluation. Second. And third thing, you have to report about 1 husband and 5 wives is your life in the financial statement. 1 husband and 5 wives in the financial statement. That is your life. It's nothing but how, what, when, where, why, whom. All this you have to include in the financial, non-financial information. As a non-financial information, you have to include in the financial statement. And fourth one, PESLE. So one more question in all the type of examination, PE, ST, LE. I think all the youngsters, they knew this. All the seniors like me, they are only few, they knew it. PESLE, PE, ST, LE. That is nothing but whether the project is affected by or controlled by PESLE. Political, economical, social, technological, legal, environment. All this you have to cover in the financial report under the category of non-financial information. That is, one is what? SAPE, 1 husband and 5 wives, and fourth one is PESLE, PESTLE. So what are the non-financial information as recommended, as said by our ICI? Statement of mission and mission. What is the statement of vision? Vision. What is the company's vision? What is the mission of the company? That you have to give. But normally in the financial statement, this vision and mission they are not giving. What are the strategic objectives? That is inadequate presentation of strategic objectives of the company. That is in the financial statement as a non-financial information. Our ICA, as that is through FRRB, they insist that strategic objectives should be there. So organization and group structure. So organization and group structure are not presented. And fourth, another one is management decision and analysis. Management discussion and analysis have not been provided, which is very important from the stakeholder, because what is the decision taken by the management on this point and what are how they analyzed everything. So that is what I said about SAPE. I said about SAPE, survey, analysis, planning, action, evaluation. That you have to analyze each and everything. Even these 4 points which I said, that will be useful for your personal life also, wherever you are going for, even for a movie also, you can adopt this SAPE. Which movie is good, which you can analyze, you can plan how to go, and everything that you can get from the SAPE analysis. Other sections of the report are also not provided. And board report, some portion of the report is not disclosed. That means in the financial statement, what are the board's decision that are material in nature that you have to report in financial statements, but few companies they are not mentioning it. And disclosure required for law is also not. Say if the company is affected by any law, that has to be disclosed. That is not there in the financial report. Then credit rating. In the board of directors report, no credit rating was given in the report. Normally credit rating is required by the company to be given in the, you have to mention the board of directors. Few companies they are not giving credit rating. Like, why they are not giving credit rating? Because the cost charged by the rating agency is huge, 5 lakhs, 10 lakhs. Because they are not thing, and particularly if you are practicing in bank loans, if you are doing any bank, if your client is doing any bank, getting any loan from the banks, the rate charge or fees charged by the rating agency is 5 lakhs or 10 lakhs. And if the loan amount exceeds 5 crores, they want the credit rating. And you are the auditor of the company. All the credit rating agency, what they do, they got the company from, they got the number of the chartered accountant, telephone number of the chartered accountant from the bank, and they used to call you directly they want to get all the information from you without paying you anything. They will not pay anything, but they receive all the information from you. But according to me, you are not supposed to give any information about the client, because the relationship between you and the client is very much important. Even if it is that, then let the client comes, let them pay the fees, then they can get the details. Even they can ask you, sir, how many shareholders are there, whether there is any dispute between the shareholders or not. All details they will ask, because you know the disputes. You know the panchayat, enna panchayat nadadhu namakku theriyum, but all those panchayat people they want, because they want to give a very bad rating about the client. So normally in board of directors meeting, this credit rating is not done. Comparative presentation of credit rating facility wise was not provided. Chairman's statement speech, it is not full. That is, chairman's statement about the performance of the company is not disclosed. So whenever you are reading any financial statement without chairman giving about the performance of the company, so he just simply quoted some statistics, but he never touched the basic point, whether the company is going in a good guns or very bad shape. Everything, if he is not touching, that means some problem is there. Contribution to the national exchequer. So what is the that is CSR, the details of contribution of national exchequer were not published in the chairman's report. Chairman has to say our company has contributed this much of CSR to the government. All these details have not been furnished. So in your financial statement you have to report it. Risk management mitigation risk, these are not disclosed by the companies. Benchmark and standard adopted for the risk management has not been published. Non-alignment with the company's risk management policy. So risk management, that is declaration of risk management policy is very much important, but few companies they are not disclosing that. Then human resource policies, failed to disclose HR policy with reference to engagement, training, development, information on measures taken by the company to meet the company's obligation and responsibilities towards employees. See, here I want to say about the two words regarding this. This also you can cover in the financial reporting as an additional point. There are two things. One is MBE, next one is MBO. I think we know it, all the seniors. What is MBE? MBO. MBE is nothing but this is a management decision and the role played by the management in taking all decisions. MBE is management by exception. That is, what are the roles that the director has to perform, what are the roles that the chairman has to perform, that what are the management decisions that has been taken place because of the MBE, that is management by exception decision, that you have to cover that point in your report. Next one is MBO, management by objectives. Then in management paper we would have read this, management by objectives. That means you can call all the employees in order to increase the production, not to increase the quality of the production. You can call all the employees together. You can invite ideas from them, then ask them to fix the target and ask them to achieve the target. That is called as MBO. Whether the company has performed the MBE technique or MBO technique, that has to be covered in the human resource policy. Internal control system. Steps taken to maintain the credibility of the internal control system have not been disclosed. How many of you are doing the internal audit? Anyone? Sir? Then 2. IP, insolvency professional. So it's a very big area wherein you can do the practice. Instead of going only for income tax or company side, this internal control, that is internal audits, are very much important. And internal control is the control created among the company. See, as an auditor, you have to advise the client, you have to take part in the management to create the internal control in the company. What are the steps that the company has taken? It has not been closed. IS audit, carrying out ISA information system audit in the company is not disclosed. CSR impact assessment, that is social How many of you have cleared social audit examination, sir? Social auditor impact assessments being conducted by NISM. And next future, that is after CSR, this social auditor's role comes into the picture. So try to complete that examination also. There is no basic qualification. Even a new entrant also, they can do the examination, social auditors. And our institute has got a separate division for the registration of social auditors. Just like IP and RV. CSR impact assessment report is nothing but as CSR activity is being carried out, whether it's being actually implemented, whether there is any actual benefit has come or not, that's a separate report you have to cover as a non-financial information. Then corporate social responsibility, details have not been properly disclosed, CSR expenditure for shortfall, nature of CSR activities etc. are not disclosed. So we should know what is the CSR limit, that is corporate social responsibility limit. You have to specifically cover that point in the financial report. And corporate governance report, fail to report the information in the corporate governance report, and the corporate governance compliance certificate you have to mention in your financial statements. And date of audit committee meeting, normally it's not being mentioned the financial statement in the non-financial information. That is, date of auditing committee meeting has not been mentioned. Only few meetings mentioned and not the full. And sometimes some companies say that the meeting, we have conducted some 17 meetings but without mentioning the date. Composition of directors as per SEBI, LODR, financial sectors. Okay, next thing is compliance with ethic and business conduct for board and the senior management. So normally nowadays all the companies, they are for the executives, they are conducting the ethical training. So disciplinary training also, people, they are, when trainers are there, they are inviting these trainers and they are giving the training to the board of directors or senior management. So ethical training. So CO declaration regarding ethic and business conduct for the board and senior management is not found. Then shares held by the directors and their relatives is not disclosed. Investor presentation, that is, it is not published in the presentation, and it's not maintaining adequate disclosure to the stock exchange, because investor details have to be furnished to the stock exchanges. Then value creation model, it is not prepared adequately. Value creation models, whenever you are creating any new items, what is value added, everything that you have to mention specifically in the non-financial information portion, but few companies, they are not mentioning it. There is value added statement. Then performance analysis of the past years. So normally what is the performance that has taken place in the last year, what is the present performance, that you have to compare it and you have to report it. That is not covered in the non-financial information part. Then horizontal and vertical analysis. Whenever you are preparing financial statements, you have to prepare horizontal total and vertical total. That is also not found in the. It's not a financial information, but most of the companies, they are publishing it. Few, they are not publishing it. Sustainability reporting. Next one is index of annual report. Color schemes, because in some of the things you want to present, you have to put the color presentation. Normally it will be there, but it is not a must one. But few companies, they are doing it. And more use of graphs, because they want to show about the growth of the company in the form of the graphs. That is also non-financial information. That also you have to give importance. Then website disclosure, as per the SEBI, you have to give the website disclosure details in the website, but they are not publishing it. Even that point is not covered in the in your financial statements. This is what I want to say about the non-financial information. And any doubt and any suggestion, you are welcome, because I am stopping the presentation, just closing the presentation here. As a motion, and our senior member is there. I need his view on this point, your experience on this point, because that is required for the members.
fact,
Sir. 17 years of experience in FRRB.
in fact, it is not one-time reading of the financial statement which will give you all the information. My experience is almost about 3 to 4 times when you go through it thoroughly. Maybe first time you will get an overall picture and then go into the details of the non-performance on financial statement information, and then go back second time probably when you go through that, you will start knowing the various deviations and things like that. And then on the checklist, whatever the checklist which are required for the financial statements, I think if you are able to really feel it and then understand that, I think you will have a thorough the review of the entire financial statements.
Whether the checklist is there in our ICI site, sir?
Yes.
It is there.
Yes. You can have all the resources, every resource, guidance note is there, all resources. Every resource is available in the website. As a technical reviewer, we are allowed to go into all that.
So,
it takes generally not 3 days at most. It will take, I never completed a report less than 10 days.
So minimum 10 days are required. So first thing you have to go, initially you have to go through the report, then analyze the report, then you have to prepare the question.
Then make notes.
Make the notes.
Underline it out, it depends upon the individual. And identify the areas, the critical areas. Every company has got some critical areas. Those critical areas you will have to refer back to the all standards and all that. Whether they are presented properly or not. Then only you will get the entire grip on this.
Okay, sir. Thanks for your valuable experience here. Anybody wants to speak, sir? Want to tell? Okay, sir. Thank you very much for the patient hearing. And again, this topic is a very big topic, and it requires at least minimum of 20 days to update the knowledge about the sections. And to do the practice, he has got 17 years of practice, and we need suggestions from the experienced person like him. Then thank you very much, and any doubt you are welcome, sir.